Welcome back to Primary Source China Investment. This week we're on show W4, and we're going to talk a little bit about the investment competition landscape from the private fund managers and a little bit about their performance. So if you recall, last week we basically gave you the key to better China investment. That was a little bit of asset allocation goes a long way. You get a lot better return and a lot lower risk. So this week we're going to talk about the so-called smart money. And we've covered the private managers in the past, but this week we're going to take a look at their performance, but we're also going to try to understand who are these private managers, where do they come from, and what are they doing? So first up is performance. If we look at the major market index, the CSI 300, for the first quarter 2023, it was up 4.63%. The average long-only private fund was up 3.93, so a bit of a lag. Now, there's a lot of strategies, but today we're going to focus just on this long-only strategy. There are almost 20,000 funds chasing this strategy. And of course, there's a distribution around that mean, showing some observations in both tails, the big negatives and also big positives. But alas, we don't know who's going to do that beforehand. So with so many funds opening and closing in each quarter, it's really hard to find these winners and losers, if you will. The past quarter alone, when AUM was increasing in the private fund space because of a rising stock market, almost 7% of the managers quit, a net quit of 7% of the managers. So there is a lot of churn underneath this. So, Peng.guo, what do you think about just the performance from CSI 300 and these private guys? Just relative.
Honestly, I'm quite disappointed with that because suppose private fund. I know normally their equity-based strategy, they should beat the CSI 300. And the CSI 300 almost not move, not too much return for this year.
Yeah.
As I know, most of the people right now chase the Zhongzhen 500 indices. So that is middle small cap and more diversified.
And that actually did better. That actually did better than the CSI 300.
That's exactly. People probably lag to the market due to many reasons. Maybe enough poor strategy, and not enough time manage it, or I don't know how to calculate those average number. So that's a methodology probably worth to take a look.
Yeah.
Generally speaking, they should screen to the private fund manager, choose the investable fund manager, and use their product or their fund to calculate the return, rather than make a composite fund return.
Yeah, there's also probably one big reason here, which is in an up market, when the market turns and starts going up, a lot of these managers have been asset allocating in a down market. So they're holding some cash and they were slow to invest that cash into equities. So they lag the index a little bit.
Yeah, that's as soon as you have cash, you realize you cannot capture the return. If you capture return, and you will suffer the volatility.
Correct. This is the whole notion of sort of chasing returns. But I did want to turn a little bit to some positive news for foreign investors. So Bridgewater's on the mainland. They a lot of resources. They've raised a ton of money. They do have good brand awareness. Ray Dalio is back and forth to China a lot. He's really trying to be very objective about China, which we certainly do appreciate. He's been there for 40 years on and off, and his fund is now over 21 billion renminbi, and there are 7 other foreign managers with more than 2 billion renminbi. So 2 billion renminbi is about 289 million US dollar. I would argue 289 million US dollar under management in China is still a money loser, given the compliance and human resource requirements. Wanted to give you a visual on the size of the market. So if we look at total managers, more than 22,000 private fund managers in China, which is a massive number. They manage more than 150,000 funds with 20 trillion renminbi, about 3 trillion US dollar. That's a little deceiving because a huge chunk of that is what's called private equity and venture capital. So 13,000 managers in the private equity venture capital. You can see the numbers here. Total funds 51,000, AUM 14 trillion or 2 trillion US dollars. But the area where we're focused on, which is the secondary market, so-called stocks, bonds, etc., those are classified as hedge funds. 8,600 managers managing 92,000 funds with 5.66 trillion renminbi under management, or about 820 billion US dollars. That does put it in perspective. Competing against that is 150 licensed asset managers. That doesn't include asset managers on the insurance side, doesn't include bank wealth managers, doesn't include tons and tons of areas that these companies compete. Just trying to give you the perspective of how big this market is. Those 150 just asset managers, they have more than 25 trillion renminbi. So we can say the private secondary market managers, stocks and bonds, like we said, those labeled as hedge funds, manage about 20% of the industry at this point, which has been a huge growth from almost zero, maybe 7 years ago. What's your thoughts, Peng.Guo?
You're right. It's definitely a big market, and it's a crowd of the people, no matter domestic and international. Almost everybody try to play in this market. A good thing is there's no very clear brand in this market because the China market have a very high volatility. Most of the good performance are really tied to the beta compared to such big market size. So anything they try to talk about the size, that really means the beta. And due to the we talk about the sector rotation, so they really rotated like the fan rather than clock. That means nobody can win for the long term, and people always suffered. And so this is fund managers' problem. Actually, most of the time I disagree with that, especially for good private fund manager.
Definitely. So who are these managers? This is a good segue. Who are these managers? Who starts a private fund?
That's a bunch of ways. One is whoever have a resource. So they have money or whatever the resource, they can start a company. So this is really like from company level rather than fund manager level. They can hire or find whatever the fund manager. Whoever really manages those funds have investment skill, it came from either the domestic or the international. So one is purely grow up from China domestic market. So they understand the China market volatility. They have their own philosophy or skill to do it. And secondly is probably like the Ray Dalio, like the hedge fund or international style, follow the traditional whatever investment philosophy or strategies to do in this market. Private fund have the stop loss line. So if you reach it, your product pretty much get over. And
so this is like a drawdown you're talking about. So if we start at a par value of of 1 and we drop down to 0.8, we're going to liquidate the fund.
Yeah, that's right. I think every fund manager makes the same challenge. While the market up, they try to capture the index return, which they cannot bid, and they don't want to suffer the index volatility, which is impossible.
Right.
Whoever would be, and even they also have many structured products, like the leverage, like add the option, add some personal collateral, whatever the ways. They have many different ways to mix in this area. But my personal opinion, most of them don't create too much value, but just add some sales or channels value. From my perspective.
Yeah, that's a good point about the distribution. I mean, there's a lot of funky stuff going on social media and distribution deals and live streaming and all sorts of things to try to generate business. But what you said at the outset was interesting. Some of these funds are just started by entrepreneurs. You have an entrepreneur, not necessarily an investment professional, but you have an entrepreneur that finds an investment professional to get into the business because they think it's a money-making business, not necessarily that they're passionate about investment.
Oh yeah, absolutely. Yeah, so that's is, you know who's the big player? Entrepreneurs from real estate industry.
Of course, yeah, of
They have
course.
money, they have resources, they have some investment experience.
Yeah, that's like everybody wants to get into, 18 months ago, everybody wanted to have their own crypto coin. So, it's dangerous when the market becomes saturated. And like you say, there's no real brands that can really distinguish themselves over a long period of time. You have the private fund market that's been in business for, I don't know, 10, maybe 15 years now. So
Yeah,
there are some.
whoever build a brand, they will win the market. Like Ray Dalio,
Yeah.
their founder really came from his book and his personal brand.
Yeah, but there's only one Ray Dalio. I mean, let's just be honest about it. And
That's
if
true.
you're a foreign company going to China right now and you want to set up your own shop, $3 million a year in revenue is not going to make it. You're just not going to make money. $3 million a year when you have to pay distribution fees, you have to have compliance, you have to have office, you have to have staff,
That's
research.
true.
There's just no way the math works. So if you were to launch a fund at $200 million in the US, I don't think it would be profitable either. But, that's for another show. But we're going to leave it here this week with show W4. Thanks for tuning in. Hope you figured out something about the private fund market.
Thank you.